Hi, I'm Dave Insall on behalf of Snakk Media. Welcome to the third in our CEO video update series for shareholders. To update us on Snakk's just released Q3 results, I'm joined here by Mark Ryan, Group CEO of Snakk Media. Hi Mark.
Hi Dave, good to have you back.
So tell us, Q3 is traditionally a big month for Snakk Media. How did it finish up?
It was a great quarter for us, Dave. It was a very busy 3-month period. We generated $3.3 million in revenue, which is about 47% year-on-year growth compared to last year. It was also 47% of all of last year's revenues, just done in that 3-month period. And as a result of that revenue growth, we have made a one-off adjustment off the back of some major trading agreements that we've done with a few of the largest global network agency partners across Australia, New Zealand and Singapore. It totaled just over $680,000 and accrues back to July of last year, and really sets us up for the rest of the year to have these deals in place with these businesses.
That's a big uplift from Q2. What were the main contributors to Q3's performance?
Look, Q2 was it was a very busy period, although the revenue didn't show it. And it does seem that a lot of the work, the preparatory work that we had done in Q2, it really fell into place in Q3, which is great. We also had a very busy period in New South Wales, which is our key market. That's growing very strongly. New Zealand is doing very well. We put more people into the team and we're seeing the results. And Singapore, we're seeing trade coming through Singapore and also other regional markets, which is fantastic for us. There was also investments made through Q1 and Q2, particularly into people, technology and our products, and we're really seeing them starting to pay off now.
And if you had to pick out some highlights from Q3, what would they be?
From a financial point of view, the revenue growth was very strong, as we've discussed, but we had 2 months where we broke $1 million, which is pleasing. It's a real benchmark for us. We had 1 month, December in fact, that was very close to $1.5 million in sales. From a technology perspective, we had 2 big wins in Q3. We launched TV Sync, which was a Southern Hemisphere first. It might have even been more of a global first, but we're not saying that. We ran a campaign with Peugeot, and that's our product that actually syncs up mobile advertising on social networks to run at about the same time as a TV ad in real time. We've seen great results from that and a huge reception from the market. We also inked our deal with Nativo. That's been 12, nearly 18 months in the making, an outfit outside of Los Angeles, and that allows us to deliver native in-stream advertising for mobile, which is a first for this market, and it's another one that's generating a lot of interest and really keeping us top of mind around our innovation creds. From a talent point of view, we had some great hires. We added to our sales teams across Sydney, Singapore and NZ. We also hired Carlos Guedes, our first creative director. He's a very awarded guy, came out of digital agencies in Portugal. He worked for JWT and Isobar, some of the big network brands, and already we can see a tremendous uplift in the quality of the work that we're coming out. And look, for a 2nd year running, we earned a spot on the Deloitte Asia Pacific Fast 500 Technology Index, as well as the New Zealand Fast 50 Index for Deloitte, which is, fantastic news for us and part of a lot of hard work for us to get there.
And what's the outlook for Q4?
Look, Q4 is where we land the year, and there's a lot of work going on from a sales point of view. We're starting to see things pick up. January is always a funny sort of month. There's a lot of people still on holidays, but already in February we can see that there's a lot of work starting to build up, and we're looking forward to finishing the year with a flourish. Represent Media, our new division, is going very well. We've got some very, very strong publisher prospects that they're in the pipeline, and we hope to have some exciting announcements soon around that space. We're also seeing that Singapore is showing pleasing signs of growth. It was probably a slow start in real terms for that market, but we kept our focus there, and we've added people into the team, and things are really starting to show encouraging signs, particularly the markets outside of Singapore, which is great for us.
We talked about the share price in the last quarter. There hasn't been much change since then. Is there anything you want to say to shareholders about this?
I think our share price reflects what happened in Q2, where we just didn't show the growth that we had shown in previous quarters. We had been growing for 8, 9, 10 consecutive quarters very strongly. It's great for Q3 to see us back where we would like to be, and we hope the share price will reflect that. But as I keep saying, we worry about the business, we work on the day-to-day, and the share price will perform accordingly over the long term.
And looking forward, what's on the horizon for Snakk?
For our local market, Australia and New Zealand, the market is maturing so rapidly, and look, so have we. We look back on what we were doing 2-3 years ago, and it's a very different business, and we'll just continue to focus on the relationships we have in market, the trading agreements that we have in place, and just delivering good work out there. Across Asia, which is such an important market to us and where the future of the business is, we're going to continue developing the markets, not just in Singapore, but all through Southeast Asia, and really put the foot down through 2015 to grow out.
And can you talk a little bit about the upcoming capital raising?
It's been almost 2 years since our last capital raise, and now is the time to work out how to fuel our next stage of growth. We've got an existing market across Australia and New Zealand that's been very healthy for us, and we really want to keep that growing as fast as we can. We've got a lot of technology, innovation and product that we can see is going to be able to be brought into the market and really differentiate us out there. And there's also an enormous opportunity that we need to capitalise on in Southeast Asia, and the capital raise is really going to help us do all of those things.
And what challenges will Snakk face in the year ahead?
Yeah, look, we spend a lot of time trying to work out what the challenges are out there for us, particularly over the next 12 months. I think if we look back over the last 12 to 18 months, Snakk as a business has really tried some interesting and some different things, and I think we've had more hits than misses, but the challenge for us, particularly over the next year, is just going to be executing on what I feel is a very tight vision for the 2 or 3 things that we need to do extremely well. I think it's one thing to be innovative, and it's another thing to execute well. The best businesses in this space, maintain a balance between both of those, and it's a real focus for myself and the team through the next 12 months.